Hey guys, how's everybody doing? Exciting news. I'd like to thank tradingvolatility.net for sponsoring this video. Exciting announcement. Wall Street Bullies is now going to be partnered with Trading Volatility. If you spend over $50, um, send me a screenshot, a DM, or whatever you need to do, and I can hook you up with a 1 month free trial to their website where you get access to some of the most insane data that I've ever seen in my life. Gamma exposure dashboards, skew dashboards, dark pool DPIs, um, all really great stuff that I use in my scanning a lot. And the gamma exposure itself has really helped me prepare for market moves and to help see potential drops and big, large moves in separate markets before they happen. It's some really intense stuff, and I actually did a daily dip feature a few months ago on my favorite websites to use, and trading volatility was definitely one of them. Without further ado, let's get into the video in which there was the most volume traded. So this is the price in which the most volume was traded on this profile. It's all a POC is, which typically correlates with the theory that this is where the big money came in, defended price, accumulated their position, etc. The belief is that after a consolidational period, once price trades over or under this point of control, the trend usually starts to resume or continue um, in that direction. As you can see, once price started trading above this point of control here around 72.30, it ultimately began this crazy move up beyond, 110. And even so on, if you take another volume profile of this consolidational period, you can see once price started trading above the pink line, above this point of control of this period, you can see that price had a pretty quick movement up as it started using that level as support, as those big money positions were coming in and defending those longs. So, short or long, the belief is that once institutional money has accumulated its position, it will make an initial push away from the point of control in the direction of the overall trend, but will ultimately come and revisit that point of control to confirm the move and continued trend as quote unquote big money comes in and defends its positions. Similar to a technical breakout where price comes down to confirm new support from a previous resistance level. If I had to summarize one, one the, if I had to summarize the most important thing to keep in the back of your mind while trading volume profile, it's whether you're taking the profile of a downtrend, whether you're taking the profile of an accumulation, price will always come back to these points of controls. Just think of it as trading in between the point of controls. You're going from point of control A to point of control B. So another term that we need to familiarize ourselves with is the volume price gap. Volume by price gap, doesn't matter what you want to call it. It occurs when you have these two distinct, clusters of volume on your profile, followed by a very shallow, very noticeable difference in the middle. Um, the belief is that once price moves away from these points of controls and into these price gaps, these shallow gaps, you'll see a noticeable price acceleration in that direction. This doesn't always mean that price will immediately vacuum up to the next large profile bar, like you see here at like, what is this, 39, 37, 39 right here. Price will price likely will interact with the areas in between where these institutions came in and added to their positions. On the profile, these add areas appear as these little smaller lumps or what I call clusters in between the large institutional areas. So for example, right here on Oxy, you have this noticeable volume cluster right here. This is some pretty, noticeable accumulation in these areas. This right here is a very noticeable volume gap. There's pretty much no volume in these prices right here. But, if you look at the middle of this cluster right here, there's a small little volume bar that kind of pokes out above all the rest. If you look at the overall trend on Oxy and you see this big red bar right here, kind of the cluster correlates with this bottoming wick in this area right here. This is probably an area where institutions were adding to their shorts. So on your volume profile, it appears as a small little lump or cluster inside of the quote unquote volume gap, if that makes sense. So if I go down to the daily, just to give you a better visual, looks a little more clear on the daily, you can see whenever we enter this quote unquote volume gap, it's pretty much nothing until about 37.85. But you see this little, you know, this little bar right here at about 32.50. So it is likely, in my opinion, that once we start trading above $24 and get into this volume gap, that we should see a pretty nice acceleration into at least $30 on Oxy before we start hitting some of this volume congestion. Because this is showing you that back whenever price traded at this area before, and this correlates with this accumulation right here. It's funny how that works. So this is obviously some kind of distribution or accumulation zone. And this gives you a really good idea of where price is going to find resistance. So when you see a volume gap, you can't immediately assume it's going to go straight up. But a lot of the times what happens is when you enter these areas, you start forming these continuation patterns within the gaps. So on Oxy, I don't know why I switched. Um, what will likely happen is if we begin to trend up to this previous volume cluster, um, you'll probably see some kind of, you know, bull flag setup, some kind of consolidation before you break back up. So those previous ad zones start becoming your accumulation consolidation pullback zones where you're likely to start forming those patterns, if that makes sense. So when you're on your larger time frames, you'll see your igniting moves and you'll still experience your pullbacks and sideways accumulations, but a lot of the times these chops will form into those patterns, as I just said, as they attempt to move price between points of controls, i.e. institutions averaging up / adding to their positions. On your smaller intraday movement, these volume profile gaps provide super good scalp opportunities, often showing clear supports, resistances, or at the very least, areas of heightened interest. So, and especially if you day trade options, weekly options, 1 or 2 weeks out, it's a good strategy. You can go on your hourly charts, and you can see, look here, right here on Oxy. Once we broke under this 2410 level, you kind of see this gap down here, and look how quickly price fell. And we're entering another volume by price gap down here. So, and then once you start noticing this, you have to look at your candles and be like, okay, well, if we break under $22 right here, this is your most probable area to take a short position, because under this zone, you start seeing that acceleration in volume, if that makes sense. So this is a really good way to use, a really good way to scalp on the intraday movements, and a really good way to swing on daily and weekly time frames alike. So another way that you can use volume profile, in this case, to determine likely areas of a pullback. So let's say the anchored volume profile on my right is gone. And let's say that none of the candles after December 14th have happened yet. So you have this big igniting bar and just this red candle right here. So if you take your volume profile and do the whole uptrend, it shows you in this uptrend where your longs added to their positions based on these clusters. And it also shows you the most probable areas where a pullback could find support. And as you see, December 21st, right on that point of control, right in this volume cluster, longs came back in, defended their positions, shorts got out, price resumed upward. And same way you can use it on downtrends, just the same. You know, price breaks resistance and immediately comes up to that point of control, which, in this case, that would have only been $1, but for Oxy in options, $1 is a pretty good move for an intraday scalp. Here's another great example of using the volume profile on a downtrend. So I have it from the start of this red candle right here to this little hammer down here. And you can see once price gets back above this point of control, it very quickly comes up to this next volume cluster up here where shorts were likely adding to their position. As you can see by this top wick, you had some kind of pushback before we had to accumulate and push back through. And then you can see price comes up to the next big cluster right up here. And this is kind of like an introduction elementary principle of order flow where you take these uptrends and these downtrends and you're watching where the volume is and where the volume's coming. All right, let's get into some of the examples. I do have a couple saved to my PC. So Starbucks on the daily, you can see that with the flexible profiles, you can take these accumulatory zones, these little accumulation zones, see where the volume's at. And when you're making new highs, it's a good way because you don't have too much data on the anchored volume profile up at these levels because, there's not, Starbucks hasn't been at these levels before. So going into your intraday moves and throwing your profiles and even on your daily accumulations can be a really helpful way to initiate your swings and identify those dip buying opportunities before you break out to the next leg of you know, your targets or whatever. So getting into some of the examples here, let's see if I can full screen this somehow. So I took the volume profile, the flexible, drew it on this downtrend, and you run your technicals, you draw your trend line, your diagonal downward trend line. Once price starts, you break your downtrend, right? You see this right here. We close above the point of control. Obviously, we chop a little bit as those, institutions are accumulating their position. But once we break that high, the whole point of this example was to demonstrate this volume gap right here. Because as soon as we broke that, look how quick price came up, got pushed back down by these shorts into this top wick right here. In one day, price went from down here, accelerated all the way through this volume gap, all the way up to the next level where the institutions were waiting to defend their shorts. Right? Here, Wells Fargo. So this one was mostly taken to show you the interaction between breaking this downtrend right here on a technical aspect. You've got your bullish volume by time confirming your breakout. So when you look on your profile, you see price start breaking above this point of control. But once you notice this hammer right here, well, bullish, this is a pretty bullish candle, whatever you want to call it, doesn't matter. Technically, it's not a hammer. Um, but you can see once it starts using this point of control as support, price just starts trending away as the big money has come in, accumulated their positions, and now price is ready to start trending. And doubly, this goes into a volume gap example. As price trades, you can see, look at this grind. Look at all this volume, just what I call volume congestion. So you see price grinding and grinding and grinding, and once we finally break over this significant volume bar, this volume by price right here, look at the once we look as soon as this decrease in volume happens right here, this little miniature gap, I guess you could say, big bar, big igniting bar. But so if you look up, you see that cluster, as I mentioned before, at about $40. So I expect price to ultimately trend, pull back, form its patterns, whatever, and ultimately push to 40 before shorts come in and try to defend their positions once again. Or if you believe in the supply and demand theory, as unfilled sell orders come in and attempt to push price back down, whatever you want to believe. Once you start doing charts and technicals long enough, you'll start to realize that all these different theories are mostly the same things with different names, right? So big takeaways here are the bullish volume by time confirmations in confluence with your volume by price point of controls in your volume gaps. So Oxy daily, we already talked about this one, but I had it saved in my examples. You throw your technicals, you have your resistance here at this volume shelf right here. Um, Most likely we'll start trending towards this area of interest, like I mentioned, where shorts will probably come in, try to defend their positions. But you can also take a look down here at the point of control that I boxed in. As soon as price traded above that point of control right there, you see how quickly we kind of popped in there, right? 2 days of a pretty decent move for this kind of ticker. Okay. What we got here? So Tesla hourly. Okay, cool. So this shows you I took the volume profile of this uptrend right here, and it gives you a close look at where your probable pullback zones are going to be. So if you look at the arrows, as I said, arrows equal to money, institutions, big money. You can see you have an area of interest right here. You have a cluster down here as well, indicated with the box. And if you look on the flexible volume profile, it just confirms the same thing. Look at this candle right here. Zoom in a little bit. Reject right off of the point of control, and just look at what happened. Tesla got smacked. Price could not get back above that level. Had a perfect retest of it right here and just crumbled. Got sucked right down into this price volume gap and then started finding support in this cluster, right? All right, we got Kohl's daily right here. This one, pretty good example of using the flexible volume profile to draw your accumulation zone. So anytime you see a 4.5 month, this is a perfect coil, like volume profile to the side, like, you know what I mean? You gotta train your eyes to just be like, okay, this looks nice. But oh, whoops. So, my bad. You see a 4.5 month consolidation. Price starts grinding sideways right on the point of control, right? And then eventually breaks away comes up, retests that breakout perfectly, and starts continuing to trend again. So once you have this retest, this is where I would have started looking to maybe get in. Okay, let's see what else. This one had a pretty nice volume gap. You see, once we started getting above that point of control and clearing this volume congestion, which, by the way, this red candle probably aligns with the top of this. I know this one does. Pretty much aligns with it. You'll start noticing these little shelves act as support visually as well. So Kohl's, look at Kohl's. Kohl's had a very sharp move up. You see the volume got very thin in between about 25 to 39. And I mean, retail just went bonkers. I tried to draw the uptrend right here. This is a 3-week move to give you those probable pullback zones, and you can see right here in this area, look where we found support again. This is a likely area where they were adding to their position. These clusters are areas where they're likely adding to their positions. You know, you have to use context is everything. Context is absolutely everything. Zoom, I posted the alerts on Twitter. We hit a really good move on this one based on the volume gap. I said I forgot what my trigger was, but I think it was 370 something. But look at this consolidation I took 1 month, 1 week. Look at it starts losing the point of control. We start breaking down, and that has confluence with this volume shelf right here around 400. So once price entered, or I guess lost this shelf and started falling through, I said, hey guys, Zoom is probably a pretty good short lately, or a pretty good short soon, sorry. And I mean, look what happened. We saw a really nice, sharp 4-day free fall before we started finding some kind of balance in the market. But it came down and just about hit one of these shelves down here after a pretty sharp acceleration down. So Zoom, I believe, since then has gone up pretty significantly since I took this screenshot a couple of days ago. Let's see. Go to a live feed. Yeah, so it works out. Look, so price broke that downtrend ultimately, but came back up into this cluster. So you got this right here. This is makes sense with this. This is the same volume profile bar, but price came back into these shorts. Look at this. I can't make this up. Price comes back into these shorts, and look at the candle that formed. You know what I mean? And so based off of everything that we've talked about, you can expect price to possibly, if we lose 377.50, to come down to this little shelf right here at 356, because this is possibly in an ad zone for this breakout, right? Okay. All right, cool. So this is a very good example of an intraday scalp opportunity using the volume gap. So price loses its point of control, breaks support under this shelf right here. Um, you wait for your entry, whether it might be the break of the low right here, or whether you lose the point of control, you take your short, whatever. But as you can see, this is an hourly chart, I think, and within 3 candles, look at this. It goes all the way from point of control to volume congestion cluster. Same. This is where these are 2 obvious areas of interest, and look how quickly price accelerated. And then you've got this cluster right here that's providing a resistance for price to get back over. So I would wait, if this was an active trade, I would wait for price to clear this again before re-entering this gapped area, if that makes sense. These are like support shelves and resistance shelves. Do not overcomplicate it. You know what I'm saying? Like, it does not need to be overcomplicated. Oh yeah, and here's the updated Zoom chart that we just went back and looked at real time. I didn't realize that I had taken a screenshot of it. But you can see once we cleared this point of control, price quickly retested that one. Let's see. Yeah, and here's another example of the volume by volume gap intraday scalp opportunity. You can see in one candle the entire range was hit. You know what I'm saying? The entire range. And you can even see right here, I forget, I don't even know what stock this is. This might be Oxy, I don't know. Um, Obvious area of interest right here. Volume gap. Obvious area of interest right here. These are where your institutions are sitting. These are the areas. And I say areas because support and resistances are not specific levels. You will get burned. All right, Dillard's. Why did I screenshot this bad boy? So this one is a good example. So point of control. So price breaks away from this, comes back down, and gets defended here at this volume shelf. As you know, longs added to their position, defended their position, and I mean Dillard just went crazy. Um, Went accelerated pretty decently into this lighter volume area right here. Um, okay, so I remember now. So point of control down here, all this volume, and then you've got this significant area right here. In relation to this one and this one, these two aren't really as significant, right? These are obviously areas of interest, as you can see with all the congestion. But ultimately, if you take out these accumulation zones and these consolidations, price is going from point A to point B. You know what I'm saying? And you see that's why you see this heavy rejection here as we start getting close into that volume shelf resistance. So if you take out all of this, price is pretty much gone from point of control to the point of control up here, right? Which accumulates, or I guess, which coincides with all of this heavy accumulation to the left over here. All right, last example. Here's a live one. So at the time of recording, you see UPS daily, pretty significant volume gap down here with a noticeable cluster, right? So within 10 seconds of looking at this chart, I go, whoa, okay. So here's the volume shelf support right here, right? This is the possible sell zone. If price gets under this level, there is a huge probability that we find some kind of congestion here. And then if you want to bring psychology into it, you simply turn this green, turn this red, boom. It's a 10-second analysis. And what happens if price clusters and consolidates inside this green box and falls down in here? The volume gap just continues. And then you make your way down to 124 more than likely. You know, this works on any time frame. Weekly, look at the weekly. Yeah, it just paints an even clearer picture. This has an opportunity to go from 155 to 145 to 135. And that's a 5-second analysis based on volume profile. Nordstrom weekly, look at that. Bounces off the point of control. We get above this volume, these little volume shelves right here, and we really see that acceleration into this cluster right here, Price breaks above that, and we're moving up towards this next significant area of congestion. I mean, that's a pretty crazy move. All right, guys, so that is volume profile and kind of how I use it to do my charts, scan, do my technicals. I use Confluence with a lot of different things. Volume profile is by far my favorite tool. You know, if this video was helpful, you can always support me by checking out TrendSpider. I do have a link. I can get you 25% off any plan of your choice. Just hit me up. And you can also check out my apparel store, Wall Street Bullies. Got the Degenerate Options Trader hoodie that's been really popular. 5-day profit chart, 4,500%. Flip it over to the back, you got minus 98.6% all-time chart. Just trying to unstigmatize the stock market scene, build a funny brand. Just have a fun community of traders that can laugh about what we do. 10% a day keeps the day job away. Buy dips, sell rips. You know what I mean? So I appreciate you guys' time. I hope to be making content regularly again. Sorry for the hiatus. Looking forward to a great 2021, man. Let's get it.